So yeah, mm, this is a demonstration we are trying to do about our strategy that we are going to follow for Ethereum and Bitcoin and maybe other trading desks as well. Uh, it's not very complicated at all. It's very simply mm, uh, constructed strategy. It has two components, one a little bit longer term and one short term. The strategy is going to be used on the one hourly chart at the moment for Bitcoin and Ethereum. For some of the alts, we are going to use 4 hour and daily as well. So I'm going to show that as well at the end of the video. Uh, for other desks like the commodities or stocks or things like that, we can use this strategy as well, and it can be used in either of these time frames I'm gonna show you right now. So here right now. So yeah, we will just start with the baseline of the strategy. So the baseline is we are trying to stay with the trend. The goal is to stay with the long-term trend, which will help us weed out at least the contrarian fake outs. So when we are at a bullish trend. If there are fake outs on the downside, which are more risky at that moment, if we think about it, it will weed those out. It may not be able to weed out that the bullish fake outs, which we expect to be fewer in a bullish environment. Um, uh, that is the base of the strategy, the core idea behind the strategy. So in a chart like this, let's say, which is around mm, which is from October, last quarter of 2023. It's, it was pretty bullish through October to November, and after the early parts of December, it started to flatten out, and through the through the end of October to uh, whole month of November, it was bullish, but not quite as aggressively as it was in October and in early December. So that is visible through the charts. So this is the part that is more bullish. So if we think about it, it's let's say, so this was kind of flat. then then we had some bullishness, then we had some slight bullishness continues, and then again strong bullishness, and then zigzag motions through this last few weeks. So yeah, that's about it. So what we are trying to do is, in these sort of environments, we are trying to weed out the bearish trends. So we are going to try to, unless there is enough bearishness to drive the market in a long term bearish trend, which it's kind of undecided at this point. If we think about it, at this point, there is actually no trend. The market is quite flat for since the start of first week of December. It's moved either way, but due to the backing of the last trend being very bullish, we're still trying to see out if the lingering momentum can carry it upwards. But yeah, that's about it. So uh, I think, yeah, in very, in a very short sentence, it's we are going to stay with the trend, and when we have a trend, be it bullish or bearish. We are gonna trade short-term trade. We are gonna take short-term trades on the hourly charts. This is hourly charts on Bitcoin and Ethereum on that direction. So how are we going to do that? So that has been devised and tested uh, and uh, and built up and have been built up on a very rigid kind of structure. So as I said in the beginning of the video, uh, it's we have two indicators for that. One is this, and the other is Supertrend. So for the basic, for the 1 hour structure on any asset, what we want to do is set the Fisher to monthly, so which is a monthly period, not the monthly candles, not the monthly time frame, a total month of period. So which is, if we take the interval of time frame to 1 day for Bitcoin or Ethereum, that is going to be 30. But for the classical assets, traditional assets like the commodities, gold, stocks, it's going to be 21, because there are 21 days in 1 month's time, 21, 22. So we are going to keep that to 21. So yeah, that's your Fisher done, and we just need to change the supertrend factor to 2, because the 3 factor makes the resistances too high, or support or resistances too high or low for us to be well protected on in case of sudden movements against our strategy. So the factor 2 kind of fastens, speeds up the trend. So the gap is like it's tightened down, and it's going to make it smoother. It's going to make losses, potential losses, lower, and we are going to get out of trades quickly. We are going to keep ourselves protected, and we are also going to enter trades faster than we would have on a factor 3, which is obviously uh, going to be uh, bigger than mm, we would want. So in a trendy environment, as we can see, the strategy's idea is very simple. So the idea of the strategy, if we think about it, it's very simple. So the 30-day Fisher, it's telling us what? It's bullish here, then it's bearish, then it's bullish here for a brief moment, then it's bearish. This is undecidedness in the market here, and then again kind of bullish through the start of December. So what are our, if we look at the month of, let's say, October. This is October. So what are our trades? Which are our trades? Which are the trades we are going to take? So obviously, like I said, we are going to stick to the trend side. So what is the trend side at the beginning? It's bullish. What is this? Did it cross here below for a brief moment? It did. I think it did. Yeah, for 1 day it did cross below, and then again it was bullish, and finally on 10th of October it got into a bearish momentum. So we are going to take bearish trades here. Then again, after a few days, it turns bullish and stays that for a couple of weeks. And finally, at the end of the month, there is some uncertainty, uh, with it going bearish for a brief moment and then again bullish. And then, as we know, it went bearish again. There is some undecidedness on that side of the market. So, what are our trades? So, first of all, we have to look at it very simply. uh, let's say start week. So let's say first 15 days of trading in October. So this is kind of the first 15 days of the October. mm, we are already uh, we are already on a bullish pattern here. So we are going to take the trade and we are going to close it here. When it's going down, it's a kind of a losing trade or flat trade. The risk was lower. Sorry, the risk was low. Risk was quite tight. But yeah, it was a very short-term trade. It did not do quite well as we would expect. As we can see, this is a bullish signal, and we have the go ahead from the Fisher. We take this trade, we close it here, barely positive, but not too, mm, not negative either. But again, then again, this breakout happens. When it breaks out, we take that trade. We might want to sometime wait for the close of the signal, but in this case, when we see a sudden uh, spike, we need to maybe sometimes make decisions that we want to catch this upside as well. So this is a big bar, as we can see. It's close to $1,000 bar. So we want to catch that as early as possible. After $200-300 movement, we might be alert, and if we enter this early enough, this is a very good trade, which closes about 28K and could have been entered up at 27,500 or something, somewhere around there. So these bullish trades, this one, all these are like not this one, sorry, not this one because it went below here, but other than that one, all these ones are according to the strategy. So what is the strategy? It's Fisher has to give us the go ahead, and we have to get the Bitcoin like Supertrend trigger. Now comes the part, the bearishness. So as we can see, the market turns bearish at this point. So it stays like that till this area. So so as we can see, this is the bearish part of the super trend. Sorry, Fisher. Maybe not this much. So this is what happens here. We get the bearish signal on the super trend here, and after one day or so, to I think couple of days, the Fisher changes because that is calculating the 30 days of worth of data. So when the Fisher is at this 2.52, that value is generated through the last 30 days. This is 10th October. So from here to here, that data is affecting that the value of Fisher at that point. That is what we have to understand. Now, according to the other our written strategy, you will find also that we have two criterias to enter our trade. After we get the go ahead from the Fisher, one is straight signal, which we were getting here and here and here, and in these type of signals, this is clear cut breakouts happening on the super trend. But there is another kind of trade, that is the super trend resistance or support confirmation, which is happening here. We have the bearish Fisher, and we are testing the super trend resistance. So it's trying to go above, but failing to do so, and then breaking down. So this one is a pretty big trade, I think. It's 27,700 to closing at 27 800. So it's 26 800. It's another $1,000 trade, which at that point was close to 3%, 3.5%. So I think, yeah, this is also a pretty good example of a trade, like confirmation trade, which we are going to get again in a few moment. Uh, in the second half of the month was less complicated and exactly the kind of market we are trying to exploit with this strategy that we have developed. So this is the kind of market we are trying to target, and which would uh, result uh, in us making a lot of money if we can get it right at the right time. So as you can see, we are turning bullish at this point, which is 16th October at this point, kind of. So we are staying like that till this point. So this is the bullish area of the market. So after that, this is the bullish kind of area. Mm, yeah. So what trades have we got here? We have got this one, the first one, a kind of smaller one but positive. Then again, a good trade of $1,000, good one, but yeah, kind of good, but not too great. Again, a kind of flat one, uh, yeah, not negative. Then we get the trade that will make the whole month worth it. So we get this trade at 30,000, and we are closing that trade at 34,200. So which is $4,200 for a 14% trade. It's a pretty good trade to get, and these are the kind of trades we are going to get time and time again through the year. I think we can get more than 10 uh, trades like that a year, and these trades are hard to manage because we are getting the signal at 23 on 23 mm, October, 23rd October, and we are closing that at on 26th October. There is going to be a lot of opportunities which you will think that has not moved too well. We are gaining 2%, 3%. Let's take it. Let's take the opportunity. Let's get out. So these kind of things can happen in long term trades like this. So holding a 3-day trade on a strategy is kind of a hard thing to do. We could have gotten out at 35,000 also, which is a key resistance on the macro level, which you saw, like getting Bitcoin getting registered at through over the whole month of November later. But at that point, we didn't know how the price was going to react to the 35,000 barrier, how it will react on a new environment which it has not seen in a long time. So that is true not for Bitcoin. That is true for any kind of assets in the traditional markets as well. It's very tricky when we are trying to take profit, uh, but I would advise restraint on the take profit part, because these are the kind of opportunities that have allowed us to generate that kind of money on the tests, back tests, and we would need to hold these kinds of trades to see us emulate these kind of results as well. So I think the strategy is quite well explained. We are looking at the Fisher first. The first idea is Fisher. You should always know where the Fisher is either it's bullish or bearish without even looking at having to look at it, because it only changes very brief, like rarely. It will not change every day. It will not change every couple of days. It will change very mm, rarely after a period of more than 5 days, 3 days, and sometimes even months. It can go on for months on a single direction. This is half a month of same, uh, like it being same direction. So at this point, you don't need to know look at the Fisher. You just need to have the conviction to look for two kind of trades, because the Fisher is bullish. We are looking for bullish breakouts on the super trend, or the support confirmation of the super trend. So these are the kind of trades we will be looking at now. Yeah, the same is true for the on the opposite side of the market. When it's bearish, there are two things we are looking for: either it's a breakdown like this, or the support confirmation, resistance confirmation like this. So it's pretty simple. It's a pretty simply adjusted strategy as well. It will not create a fork, because it's staying on the direction. So these trades will not affect you. These trades will not affect you. It will keep us looking at a different uniform directive on the market. And uh, and uh, yeah, it works for Bitcoin and Ethereum both. We don't have to worry about that as well. So if we look at it, when both are really well back tested rigorously, if we look at the current values as well, so what we are looking at is a very kind of bearish uh, Fisher. But if we look back a few days, it has been a trickier market than a normal one, because there has been a lack of direction when it comes to the Fisher aspect of the market as well. So, in cases like this, we might need to make some adjustments also. Look at how the longer term mm, Fisher is at the moment. So, as we can see, it's still quite bullish. So, this 1 week and 12 period means it's a 3 month period, which is a quarter of short uh, price action, 2.5 months of price action almost. Yeah, so the direction is still quite bullish, but as we saw in our other area, other strategy. So the strategy is not changing. It's only our outlook on the market which is helping us be prepared for these trades, getting out of these early, taking as low profit as we can, and surviving this sort of environment for a better environment like this. This was a Paris area. We got a few good trades in at this point. Yeah. So just being very, very fluid on our approach while understanding the dynamics of the market with the help of the Fisher and the Supertrend. So, along with this video, there is a ton of written content on how to like understand the strategy as well. Hmm. Mm, on which you will get, uh, which will help you sorry, understand the strategy in depth. And I didn't go into much detail about what Fisher is or what Supertrend is, because mm, that's pretty much available anywhere. If you can use, so Supertrend uses something called average true range, which is pretty widely used in the technical analysis like space, and a lot of people use it. It is used on a lot of form. It can be used as a oscillator as well. It can be used as, like we are using, on a breakout pattern, on a exhaustion pattern. So it can be used on multiple forms, and there are thousands of other indicators you can also look at. But the core of the strategy, the signals, the trades, the particular decisions that we will take will be based on this, because this has been tried and tested. uh, so I think that's about covers it on the 1 hour thing. Now we may also look at some of the other altcoins or some of the other markets as well. So like depending on the necessity of those markets, also too can be too volatile for the 1 hour 1 hour strategy to work well with them, because there will be a lot of signals, a lot of fakeouts. So alts are known to like have those a lot. So, and we don't obviously want that to happen, because we don't want to trade overly. We don't want to be stuck to trades that are not yielding. So that's why we need this 4 hour strategy, or which is the same super trend on the 4 hour, and just the Fisher I just showed you on on the Bitcoin chart as well. So it's quite simple. It's just 1 week. The time frame, the interval of the Fisher, the interval is 1 week. The length is 12, which gives us a 12-week look back for the data that the Fisher will collect to give us a value and keep us tuned in that. So it's a 12-week rolling uh, trend that is that stable. Uh, so it doesn't matter in the time frame on the chart, really doesn't matter. Sometimes we can use 4 hour, which seems to work pretty well on Solana, or sometime we can also use daily, depending on the kind of asset it is. On the Solana itself, if we use the daily one from this level in mid October, uh, we can see at the current point of the trade. it's uh, it's pretty, it's a pretty steep return for a very low amount of risk. uh, over a period of, I don't know, 2.5 months. It's risk reward of more than 40, uh, and target return of 400, 500, 428% in that time. The price went to at one point 102 point something. Sorry, 126 point something from below 24. So yeah, daily, that kind of trade, yeah, it can work like that as well. So these kind of things, analysis is also good for analysis, good for, like, for us to get a sense of the market on the daily chart and the weekly chart and the other charts to do our analysis. But as we said previously, the Bitcoin and Ethereum signals are going to be based on the hourly charts, and for the alts, it will be mostly based on the 4 hourly, and sometimes it can be based on the daily. And if it is based on daily, that has to be mentioned on the uh, like note or something. The the normal standard time frame from the for the Ethereum and Bitcoin trading is 1 hour, and for the alts that is 4 hour. If those time frames are not being followed, they have to be mentioned, and there will be they have to be, like, confirmed first. So I think, yeah, uh, this is pretty much it. It's a pretty good and oil tuned like strategy we have tested for a long time. And I think, yeah, with the right people, we will have success in implementing that in the markets as well. uh, I think that pretty much covers it. Let me know if you have any questions. I will try to answer them. Sorry. And follow the material as well on the written parts, because that also covers a lot of ground which uh, specifically we cannot over a video. Anyway, thank you.